Thanks for joining and welcome back to Wall Street Silver. Our guest today is my good friend Tavi Costa. He is a partner and macro strategist for Crescat Capital, a legend in the mining industry as well. Welcome back, Tavi.
Thank you very much. I'm not sure if I'm a legend, but thanks for having me.
Absolutely. I really wanted to have you back on to talk about everything that's happening in the gold, silver markets, even the Federal Reserve. First, though, we'll start off, of course, with, your LinkedIn is an incredible place to find great information and quality information for gold, silver, even the economy. And you've been posting the most phenomenal charts about the economy, and you say we are experiencing a macro regime shift. Why do you think that?
Well, I've been thinking that way for some time now. I really think that the policy response we had since the COVID recession and the pandemic and so forth, and I'm particularly talking about the Inflation Act or the Infrastructure Act, or even what came about in terms of the money printing or the expansion of the monetary base and money supply that we haven't seen in the past. All those shifts are certainly, in my view, something that caused a pivotal moment in history. And we're seeing changes in correlations, how assets tend to behave with themselves, that I think are also sort of in the process of occurring, meaning, changes like treasury markets that used to be very safe instruments that are now perceived as having much higher risk than folks thought it would be possible. TLT down, double digits, deep double digits from its peak levels.
Yeah.
The Japanese yen, which I remember to be, one of the safest currencies in the planet, now basically in the toilet. And many places have been doing the same. And we're still living, though, in parts of the market in a world where, folks think that we're still in a low interest rate environment. It takes time for things to shift completely. So we're in the process of those things. And it's I think it's remarkable to see that shift that I'm referring to is a shift back into real assets, a shift back into
Right.
commodities, back into commodity producers. And I think that's the main opportunity here for the following or the coming decade.
Absolutely. When do you think the AI crowd will wake up and flood into the precious metals market or the actual hard assets like gold, silver, or something like that?
We've got to separate, perhaps, to answer that question, what the AI crowd really is. I mean, there has been a lot of large funds and large allocators, and there's the retail guys. And the
Right.
retail guys tend to be the last ones to party, unfortunately. They kind of miss the big opportunity of something that most people see as skeptical, with a large potential for growth in terms of performance. And I think that the first innings of this has been the central banks. They've been accumulating gold. I think that's important for those that follow this market as a checkbox
Right.
to be checked. And the second one is going to be 60/40 portfolios. They have a different way to prioritize this. They look at things from a defensive perspective. They want to find an asset that can really protect them on the downside of the market. And despite the fact that gold sometimes have not really done that
Right.
in deflationary shocks, we are in a different era, like I said. And I think the 1970s, in terms of the behavior of the market, would be quite similar. So they are the first ones to really initiate that move from outside of central banks. And I think this is coming. I really believe in that because those institutions tend to follow what central banks do. And given deglobalization trends and more entrenched inflationary trends in the economy, will ultimately force those folks to also look at precious metals. And ultimately, the money will flock into the miners as well, which has been where I think most of the alpha is for investors.
How undervalued right now is the mining sector for precious metals? How, in your opinion?
I think there's a lot of ways to answer that question as well. I think the most normal one would be the NAV, the net asset value of a project relative to their price.
Right.
And those, we can talk about being substantially lower from other decades, potentially even, close to, I don't know, 70% discounts from other eras. It's
Wow.
pretty steep discounts. Now, what is remarkable to me is projects are being sold on the back of considerations on the macro assumptions that I think are highly unrealistic. And I'll give an example. We're looking at projects, especially in the private side, in which when you look at the future cash flows and the assumptions made for those, they basically assume things like major cost inflation, which probably will be seeing some of those actually come to fruition. But then deflation on metal prices or prices for metals that we're seeing at 1800 for gold. I mean, and
Right.
that's just completely unreal. It seems to me almost like an arbitrage. From a
Yeah.
macro standpoint, that seems to be an arbitrage. And I would also say that a lot of the reserves that are being pointed to in terms of sensitivity analysis that are being used to sell those projects are using prices like $1,600 gold still right now. So,
Wow. That doesn't make
imagine
any
in a
sense.
world that doesn't make any sense, but it's basically people being overly conservative, and this is coming from an insider of the industry. Now,
Right.
imagine if you're an outsider of the industry, and all you were basically looking at is estimate for earnings. So you're not
Right.
really diving into the reasons for those assumptions that I talked about, and why would you invest in the space, right? You're seeing such a low growth in some cases, basically stagnant industry, that those estimates are really on the back of overly conservative assumptions in the macro side. In fact, I think unrealistic, because I can't imagine a world that we see major inflation on cost that it doesn't cause the price of metals to rise substantially too.
Right.
So, look, opportunities are usually in these situations. People are skeptic, they hate it. And when there is a potential for change in fundamentals, is what really create. I mean, who'd have thought that energy companies would become true free cash flow machines? That's what they are now.
Yeah.
And that will, in my view, happen with the mining industry too.
Yeah, absolutely. And you see a lot of people when they look at like the mining industry, let's say someone who's new, who's never ever invested in into exploration or production companies or anything like that. What would your advice be to them if they're first stepping into the mining sector? What would you tell them?
I usually say that the risk is in the early stages. Obviously, the more you go to the early stages of the industry, the more geology knowledge is required to
Right.
really navigate the space. And the more you go to the producers and royalties, which is the cleanest and easiest way to really price or value a company, it becomes more predominantly driven by financial analysis or even engineering if analysis if you're talking about the development phase. And so understanding that is important, because there are a lot of inefficiencies in exploration today. For those who really understand geology, this is their time to shine, because there are companies being priced, terrible businesses, meaning companies that have drilled and with very poor results, that are being priced to the same level of a company that have had great results and probably is on to a major discovery.
Why
So,
is that? Why is there such a discrepancy?
well, geologists don't have a lot of money, number one,
Right.
so they don't drive the markets in a big way, unfortunately.
That makes sense. That makes
And
sense.
and a lot of funds tend to navigate the development and the producing side of the industry. And so, until capital really flows into the producers in a big way, and until we see and that will cause the prices of the producers to rise, that ultimately drives M&A cycle, because the M&A cycle really is predicated on the currency that those major companies have, which is their share price.
Right.
And the fact that we're seeing already lots of engagements from the majors into the junior side, with price increases of like 20, 15, in some cases 30%, from very steep discounts, as I pointed out at the beginning of the interview. Imagine a world where we see 3 axes, 4 axes in prices of the majors. What would that cause in terms of an M&A cycle and speculation wave into the junior mining, which I really think that that's going to be the case. So that's why my focus.
Absolutely. Yeah, you nailed it there, Tavi. Now, talking about the Federal Reserve and everything that's happening with Powell and in the United States, what do you think the effect will be? Like, let's say they come out next month or in the next couple of months and say, okay, we're going to slowly start cutting rates. What's the initial reaction to silver and gold? A lot of people online are saying, oh, it'll go up. A lot of people are saying know it'll take a massive hit first and then go up? What do you think will happen to silver and gold once the Fed really pivots?
Look, the Fed is, I've always said the Fed has been trapped for a while, but now those long-term problems are becoming short-term ones. And what I mean by that is what the government in the US is running in terms of the interest payment relative to GDP is larger than any other country in the world.
Wow.
We're not talking about the debt, we're talking about the servicing situation, which is about
Right.
4% of GDP, approaching 5. And there is no other economy running the same amount of deficit, or I should say, the same amount of servicing debt relative to GDP,
Right.
and that's a tremendous, problem that will pressure the Fed to lower interest rates over time. And to me, the growth we've seen in the U.S. economy relative to other countries is also predicated in a lot of factors, but the main one, in my view, is this fiscal dominance from the US, not Europe, not Japan, not Canada. This fiscal dominance is really coming from the US, the US markets, and that is basically causing growth to be different and also causing influx of capital from other economies and
Right.
other households, from foreign households, really driving capital here. And so I think we are on the verge of multiple rate cuts in the Fed, on the Fed rates. And also, I think that's going to have a major impact on the dollar. I've always been a very bullish kind of, bias on the dollar relative to other FX pairs.
Yeah.
I am on the other side of this. I actually think it seems sort of appears to me inevitable that we'll see a large depreciation of the dollar versus other currencies. I'm paying very close attention to that because I think that's going to be the next narrative of the next 2 to 3 years will be that this major depreciation of the dollar.
And then the gold prices and silver prices, of course, usually
Yeah,
historically will go up once the US dollar goes down.
I think that's exactly what creates this next leg up to potentially, I don't want to pinpoint prices, but adding five, six, $700 to the gold price is sort of that next ramp up in prices has to be on the back of a big change in the macro regime. And I know I was very focused when in 2020 on inflation. I thought inflation could take off. Then I was very focused on issuances of debt.
Yeah.
If people that follow me on the treasury market and the movement on interest rates, I think the third phase of this that I'm really think it's going to be the next narrative is a major depreciation of the dollar caused by the fact that the Fed has to cut rates more than other economies because of the servicing debt issue that we have relative to GDP that is larger than any other economy. And that's going to become a narrative in my view
And
in the
and
following
and I'm
years.
sure there'll be banks going under and banks collapse and everything because you had four banks in 2023 or so go under. You never know what could happen still by the end of this year, next year, and because with all this craziness that's going on, like yeah, it's insane what's happening in the world.
Yeah, you got to stay open minded. I mean, this rush towards gold by central banks is by far the most important development going on because
Right.
it changes the dynamic of the liquidity of treasuries, in which, by the way, central banks is, if you look at foreign central banks, they're still at record levels of what they own of treasuries. Yes, China has been selling, some other central banks have been selling, but others have been kind of making up for those sales.
Yeah.
And so central banks like the ECB or the BOJ, but BOJ is sort of flat, but ECB in particular has been kind of picking up the bill recently. And so at what point do we see that shifting? And I think we're getting close to those. And the Western societies have not started really disclosing the rush, this gold rush as well. And I think that's coming. And in my view, this risk on the dollar is what changes a lot of things. It will probably benefit emerging markets too in a big way, and that's probably going to be another opportunity too.
Absolutely. Now, I'm going to put your link, of course, to your LinkedIn, your Twitter in the description below for everyone. Tavi has incredible charts on LinkedIn. I check them out all the time. But Tavi, it's such a great pleasure having you come down to Wall Street Silver. And as the market develops and gold and silver goes up or down, I'm sure they're going to go up, but I'd love to have you back on. We would all love to have you back on.
Thank you very much for having me. It's always a pleasure speaking with you guys, and thanks for the interview.
Awesome. Talk to you soon, Tabby.